Good afternoon, everyone. Today is Friday, the 27th of January, 2012, and this is Brian Shannon from AlphaTrends.net. Markets had a heck of a day here today, as this uptrend is still intact in the S&P 500. As we spoke about earlier in the week, we had broken that trend line with the after gapping lower on Monday, we had broken that trend line, come down and tested the 50-day moving average, and held above the prior higher low. So now we still have this pattern that we were talking about of the higher highs and higher lows, and obviously today we saw that higher high kick in here as well. So let's take a look at the closing numbers for the week. The S&P 500 gained 2.1%, so it's back to positive for the month. The Nasdaq up 2.5%, also back to positive for the month. The Russell 2000 rather was down slightly on the week, but still positive month to date. And semiconductors had a big week; they gained back 6.4%. So those guys have been extremely volatile, as we know. And today the bonds got hit pretty hard here, down 1.8%, and that puts right now our 10-year Treasury yield at 1.55%. So we had seen record 10-year rates this week, and today we got a pretty big bounce in the yields. Obviously, here that's going to be inverse to the what the bonds actually do. The rates will rise as bonds drop, that is. So if we take a look at the TLT just for a moment, we can see that it did get hit pretty hard today, but that it got down to that rising 50-day moving average. So it's still very difficult to say that this has made any type of top. I know a lot of people have been trying to short it, but the momentum in the S&P 500 continues to be positive. It was it's been very volatile, actually. It's pretty shaky this week. We'd seen some of these that first gap lower on Monday, and then on Thursday we saw the gap higher that really kind of made it so you had to chase this market a little bit. It pulled back to the 5-day moving average, and that 5-day moving average began to flatten out. Today we had our gap higher, and it really took off here on some comments about from the German guy. Oh man, my brain is shot there. All right, it'll come back to me here in a moment. Anyways, the point is the S&P 500 still it's in a nice uptrend here. We've been concerned that this prior support on a weekly time frame was turning into resistance, and this potentially could turn into a bearish type of flag. Well, it's looking more and more like the buyers are really gaining control, and this is going to continue to be down near about 133. That's going to continue to be the important level for the market to hold. Obviously, near term, it's gotten a little bit extended here, and next week, I wouldn't be surprised to see it pull back some as that 5-day moving average kind of catches up to it. But what we've been talking about with that 5-day moving average is that a lot of these gaps have occurred with that 5-day moving average and really turned it around, and that's what's made this a difficult environment to trade in as far as the S&P 500 goes. For the Nasdaq, we held key support in here just above that 60, or just near 61.5, 62. That's the key support level we've been monitoring. We got down to it, closed 1 day below the 50-day moving average, and technically we really, although it's not as the rate of ascent isn't as strong, we do still have a pattern in here as well of higher highs and higher lows. We didn't hit a higher high today, but we do have a higher low. So the Nasdaq is still kind of banging away just underneath this 65 to 66 zone, and if it can get back up through there, well then it's looking a lot less like the bearish flag in here as well. There's still a lot of reason for concern. I mean, we saw Apple this week had missed. It's their first miss in a while, but since the last earnings report, we can take a look at the volume weighted average price. So for the last 2 quarters, it's basically right around that 50-day moving average, which is interesting. That's the volume weighted average price since the first quarter rather was released back in April. So Apple, survived pretty good. We've seen stocks like CMG get hit really hard just recently on earnings, and there's a lot of big names out there. Well, Starbucks, got hit pretty hard in here, and these things aren't really recovering. So you got to be careful still, not to go after these on the down days, that they're not really recovering well. And I think that CMG really points that out the best because this one really continued to sell off here. CMG did, and we just barely got up to that 5-day moving average here today. Anyways, back to the broader market. The Russell 2000 was a real big reason for our concern earlier in the week as it got back below that $78 level once again. It came down, broke this little trend line that I have drawn in there, and made the lower low. We do, in the Russell though, you look at this. We have over the last month a pattern still that's intact of lower highs and lower lows. Now it's really with these moving averages crossing back and forth, it's showing maybe a lot more of a neutral market. But it was very good to see that 78 level was reclaimed, and for now holding above it today. We'll see. This was a level that I thought would be our next potential resistance. Well, it obviously continued up through there. Now we've got 80 and just about really dollars up, $80.80. Or the next potential levels of resistance. I think, it would be reasonable to expect some kind of pullback in here. But this Russell 2000 broke beyond that 78 level and just didn't look back here today. So real strong trend, and obviously the news got this one, the whole market going. But I think that you look at the semiconductors; they've been the biggest surprise to me so far this week. We did talk about the more times that resistance is tested, whether it's regular resistance, horizontal resistance price-wise or moving average, that it tends to weaken it. I was not expecting that we would continue to get up this high, but I did suggest that we don't short into this type of strength. So once we got back above that 5-day moving average on Wednesday, this market has been making this pattern of higher highs and higher lows. I would say that a pullback down towards 32 would not be unreasonable to expect next week, and we've got the potential for maybe a little bit of resistance just coming up. 33 has been a critical level for this market here over the last really for the year. If you look at 33, so we're getting stretched in the semiconductors, and a pullback would be good for it. This market again is still really, you have to look at it as more neutral than anything. It's not making higher highs and higher lows. It's not making lower highs and lower lows. It's all these moving averages are mixed up, and it's sending us still volatile and mixed and volatile messages here. And this 65-minute time frame I think really shows that the best. The financials were up 28 cents today, back up towards the top end of the range that they've been in, and just underneath that $14.90 level. So these financials really improved very rapidly here. Obviously, with the rest of the market, we had the gap lower on Monday, and they did show a little bit of relative strength on Tuesday and Wednesday. So they were still stuck below that 5-day moving average in the 1440 level. But now we're back to the top end of this range. The market could potentially still move higher. I think that there's likely a little bit of resistance near about 1520. But it just seems that this market is handling the earnings really well in spite of some big momentum names getting hit hard this week. So I think that we've got to, I think it was Zortrade said, you've got to be more excited about this market on down days, and that's difficult to be excited about the markets on these gap downs, at least for me as a trend trader. And obviously everyone has to find their own method and what they're comfortable with trading. I did mention some stocks on Twitter today, so if you had looked at those, this EGHT, which has a pretty big short position in it and a nicer looking longer term chart, I was talking about this one saying that, I thought that if it breaks this resistance here, then it's likely to continue to move higher. So if you're in this one, I'd say a stop would go probably down near about $5 a share. I won't be updating this, except for subscribers. That is the individual stocks. I did mention eBay early this morning as well. It was right in here saying that it, was looking like it's ready to go, and it had a real nice move here today. So if you're if you're in eBay, I would say maybe your stop. And here's what we were talking about as it was breaking beyond here actually. A stop would probably be reasonable down there about 44.60. I also mentioned Shutterfly, and Shutterfly has a decent short position in it as well. You look at this weekly chart here, it's been for the last 8 months just kind of putting this longer term base in. We've got the 40-week moving average, or the 200 days we can see here that we're holding above it, and now we're just kind of hammering away just underneath this 34 level. So the buyers are back back in control in this one. I'd say if you're in it, your stop probably goes down near about $32 a share. Thanks for tuning in, and look at alphatrends.net on a regular basis. I don't always post everything on YouTube, so if you're a YouTube follower or viewer, take a look. Actually, I think the best way to look at my work on a consistent basis is at Twitter, which is in my username there is alphatrends. Thanks for tuning in and have a great weekend.